This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. oil refiners this quarter expect to run their plants at above 90% of their crude processing capacity on low inventories and improving demand for gasoline and diesel, executives and industry experts said. Run rates in the year's final quarter tend to cool after the end of the U.S. summer driving season. But weaker than usual fuel inventories are encouraging high run rates even amid weaker profit margins, analysts said. Top refiners laid out plans to run their networks at between 90% and 94% of capacity through the end of the year, executives said during earnings calls in recent weeks. That range is slightly above the year-ago level.
Oil prices settled more than 2% lower on Friday as traders grew less fearful of prolonged supply disruptions from a hurricane in the U.S. Gulf of Mexico, while China's latest economic stimulus packages failed to impress some oil traders. U.S. West Texas Intermediate futures led the decline and settled at $70.35 per barrel, down by 2.7%, or $1.98. Global benchmark Brent crude futures fell by 2.3%, or $1.76, to $73.87 per barrel. Energy producers shut in more than 23% of oil output in the U.S. Gulf of Mexico by Friday to brace against Hurricane Rafael. However, the latest forecasts on trajectory and intensity reduced the risks Rafael poses to oil production.
Moving on to the top news in the energy sector.
The European Union could consider replacing Russian liquefied natural gas, LNG, imports with those from the United States, European Commission President Ursula von der Leyen told reporters on Friday. We still get a lot of LNG from Russia, and why not replace it by American LNG, which is cheaper for us and brings down our energy prices, said von der Leyen. She said the EU approach to trade policies implemented when Donald Trump takes power again as US president in January will be to engage, look at common interests and negotiate.
U.S. renewable fuel credits rose to multi-month highs on Friday on increased demand from refiners trying to comply with mandates and higher prices for soy oil, surprising traders who expected Donald Trump's re-election as U.S. president to weigh on the market. Rising prices for the credits, also called renewable identification numbers, RINs, are welcome news for biofuel producers who depend on them to make up for high output costs. However, they also worsen the pain for petroleum refiners whose profit margins have slumped sharply this year due to oversupply and weak demand. Prices for both the D4 RINs, issued to biomass-based diesel producers, and the D6 RINs, issued to ethanol suppliers, rose as high as 79 cents each on Friday, traders said. Next, we have the top news in metal markets. The Japanese steel industry is feeling a sense of crisis, as the country's steel imports for the April to September period reached a 10-year high, with supply from China hitting a record high, an executive of Nippon Steel said on Friday. We informed the government that we are closely monitoring overall steel imports and have a sense of crisis regarding the current trend, Takashi Hirose, Nippon Steel's executive vice president, told reporters following the monthly meeting between the industry ministry and steel industry representatives. Japan, the world's third-largest steel producer, saw steel imports rise to 2.8 million metric tons in the first 6 months of the current fiscal year ending in March, marking the highest since 2014, according to Hirose.
Iron ore futures slid on Friday, as investors adopted a cautious stance amid continuously falling demand and ahead of top consumer China unveiling its keenly watched fiscal stimulus package. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.65% lower at 776 yuan, $108.45, a metric ton. The benchmark December iron ore on the Singapore Exchange slipped 2.16% to $103.25 a ton, as of 0738 GMT.
We will now look at the top news in the agricultural sector.
World food prices rose in October to an 18-month high as vegetable oils led increases seen in most food staples, United Nations data showed on Friday. A price index compiled by the UN Food and Agriculture Organization to track the most globally traded food commodities increased to 127.4 points last month, up 2% from a revised 124.9 points in September. That put the index up 5.5% from a year ago and marked its highest since April 2023, though it was 20.5% below a record from March 2022 reached after Russia's invasion of Ukraine, the data showed.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.